The following is a presentation of TFNN. The Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi everyone, Basil Chapman on the 27th day of April. My pleasure to be here. Dow's down 16 at 26,958. S&P is down 156 at 35.85. This is going to be a fascinating session. Look, the 2-minute chart kept bumping up, trying to get to the 23.87s. Hasn't been able to pierce it. Said it went down below the support. See this gray line? So let me squash this 2-minute chart. You'll see something very interesting. You see this long trading band. When will we go out of it? And that's going to be the very big question. Yeah, let's just move it right along to there. Look at that. So we've got a trading band, go a little higher, go a little bit down, but we're really stuck in the 23.85 to 23.80 area at this particular point. This is what I'm thinking here. No. Even more important, let's just do the numbers. So I'll do the numbers and I'll do it live. The Dow right now is below the all-time high of 21,169, made on the 1st of March. It's in a gray leg B. Gray meaning it's underneath the previous high. If there was a buy mode in place, and it's close to getting to a buy mode, I would make that blue saying there should be a C and a D. But what's most important is that the rectangle formation that's formed in the S&P futures in a trading band, you can see slightly different here because there's been a cup formation in the weekly chart. And if the Dow by tomorrow afternoon, 4 o'clock, breaks above 21,169 and with three major, Microsoft, what do we have? Google, and what was the other one? Netflix. Was it Netflix? No. Someone had said earlier on, the three key stocks, so Amazon. So Amazon, Microsoft, and Google having earnings out straight after the bell, we might see a spectacular move to the upside overnight. Maybe it follows through into the morning, takes out, we're up 200 and something, so you've got to the all-time high. Then you've got to be looking at a potential double top because they will be extremely overbought. That's number one. Number two is, I would love to see this consolidation continue. And I remember I talked about, Steve gave a great workshop last night. I happened to talk about a consolidation. Consolidation is really time. It could include price, but we've taken 7 weeks from the from the 1st of March high, all-time high in the Dow and the S&P. So this is used up time, but not price. And that's really important to distinguish. Not only that, the IWM took up time, but it also has broken to a new high. And what was missing is that leg D in the weekly. I really wanted to see that leg D in the weekly. I really wanted to see it in the diamonds. It's not going to work out that way. At least so far, it's not working out that way. There at a peak C, the Dow's at a D in the weekly, it's in a D in the monthly. So is the diamond. So are the diamonds. But what's really important is that in the monthly charts, the QQQ, which is at an all-time high right now at 135.44, leg G/C in the daily, leg F in the weekly, is only in leg C in the monthly. So QQQ, excuse me, trading at 135.46, all-time high. The SMHs, which have been leading on the way up and down, all-time high, 80.86, leg C, and leg F in the weekly chart. I'm calling it F for now. Leg C in the monthly. So all the monthlies are very, very positive. But the weeklies are getting a little bit overbought. We'll see what happens here. Let's look at the MDY. I hardly ever talk about the MDY. This is in leg A, B. We can call it a B, a gray B to the upside. still a cup formation in the weekly chart, leg C, but there could be a possible peak C right here in the monthly for many of these monthly charts if they don't make new highs by tomorrow at 4 o'clock. So this is going to be very important. So I want you to go to gold right now. Gold is up 2.7. It's kind of holding okay. MACD and stochastic are very poor. Price is held well. Almost certainly I'm calling this a G. There's no reason why I shouldn't call it a G. Top. And I'm going to put a down arrow. And that suggests that the daily is in a sell mode. Weekly hasn't even gone to a sell signal. That is a positive. And if you put it together with the dollar trying to rally up a wonderful 18 cents at 99.23, it's got to close by tomorrow. It's got to close inside this uptrend resistance line. Now it's resistance. It should be support. It needs to get into the 90. It's a weekly chart. 99.50s, preferably 100. And then it saved the day for the weekly chart, but still making lower lows in leg C. Monthly chart is still good. So parameters to look for, 99.90 to 100.20 on the upside would be very good action for the dollar. 98.50 to 98.30 would be really poor action. Gold numbers to look at right now, it's trading at 12.66. A break into the 12.78, 12.83 area would be a big positive, and a pullback. I think it's going to try to test the 12.60 to 12.55 area. That's kind of my thinking right now. Let's go to high-grade copper. High-grade copper is down again. It's just stuck. It's not doing very much, and it's really telling us a conflicting story here, because high-grade copper is acting quite poorly, and that's the big picture. But at the same time, if you're looking at WOOD, which is wood, the global shares, the timber and forestry shares, they're at almost recovery highs. Well, wait, they are at recovery highs. Oh, well, for the chart, it's at all-time highs, but I only go back to 2008. So let's just say that it's at least for the contract, it is at highs. And look at this potential doji and leg E. I'm really thinking that next week we start to see a pullback. Let's go to someone who wants to know about the UUP. UUP is, it's the same sort of thing. Trough, leg C in the downside weekly, monthly holding very well. It has a different configuration to the dollar. I really would prefer to just use the cash index. What I can say is that the dollar, UUP, this is the power shares, DB, US bull, is bearish right at the moment. But it is, the stochastic is at a low at 8%, and the MACD is attempting to turn around. So it makes next week very important. UUP needs to get to 25.80 to 25.93. Actually, it needs to get to that area to say, save the day. All right, let's go on TLT right now. TLT is forming their Chapman wave beak formation in the stalk leg pattern, and it's just making an H to a lowercase m pattern in the monthly chart. So yields are stuck in a range. We'll be back. Basil Chapman, Tiger Technician Tower. There are a couple of things I had questions about. I'll go through those questions, and there's some charts I'd like to go. Most of them, if they get a chance to look at the archives of these particular.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Basil takes your phone calls. Now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Folks, I was asked about NLY, which is Annaly Capital Mortgage Management, Inc. Trading at 11.89. One of our dinners has had this for a long time, always asks about it. And last time he spoke about it, I said, don't even think of doing anything. Normally I'd say take a little bit off, but I liked it very much. And it's still looking, and this is in the weekly chart. It went to a peak D back in, was it July or August, pulls back, makes a cup formation. And what I said is the left side, right side price time match. But most importantly, it went to the leg C. Oh no, I made a mistake. This is the cup and ladle. Yeah, this is the cup and ladle breakout pattern, Chapman Wave cup and ladle, to at least a leg D, and it's in leg C right now, way above the high of 11.29 made on the week of the 12th of August. Great looking chart. But look at this for the monthly. Look at that. It's just beginning its move to the upside. So it needs to make sure, I think it needs 1250, somewhere around the 1250s, and all of a sudden you're free of all the left side resistance, making that whole area of 1180 to 1160 very good support. Nice action, very nice. And then, of course, it has to break that downtrend line, and that downtrend line, it'll be your pleasure to see it tackling it at 14.30. So, yeah, Annaly Capital Management, very nice. So let's look at a couple of things here. What I'd said to subscribers, we made a Chapman Wave 5 in the 120-minute chart. Look at the left side. All it has is the, let's go to this. It has the 9-period exponential moving average. It has the Chapman 5s notated. That's the technique that I've been working on for a couple of years now. There's a 5. Sometimes I have to move it over. It's not 100% accurate, but it's getting really closer and closer to having it as a formula that I can actually notate and write down. That'll be nice when I can do it. So it went 5 up to 20,887 back about the 5th of April, comes plunging down to the 19th, has a nice sharp turn at a trough E. That was that Friday at the low of 20,379, leg E, trough E, a Chapman Wave 5 conclusion. Then it goes 1, 2, 3, 4. The only question is, there wasn't a trough here between 3 and 4. There was a peak C. And I used a combination. This has got nothing to do with Elliott Wave other than there was a 5 involved. So that went to the 5, and we have pulled back. That's the sharpest decline we've had since we took off at 20,379 back on the 19th. So all I can say is, so far this is working. So far this looks like a 5 down. I would not be surprised if there's a coda that maybe pops to the upside one more time. I don't think at this point we're going to take out 21,169, but I couldn't even tell you over the decades that I've been doing this how in the month, actually it's often in the springtime to summertime, where the month has looked terrible up until the last day or two, and then out of the blue it goes from being really negative, you get a massive whopping spike, and it extends the monthly chart leg that's in place, or it gets really close. So the jury is out. My eye says there's a real good chance we are starting to make some kind of a top, a tradable top, that is. And I wouldn't be surprised if we go into next week. Let me show you the daily chart. Here's the daily. Oh, I didn't finish. The 120-minute chart on the right shows the MACD is still very good, but turning down. Stochastic outstanding, but turning down from the 95 or 96% down to 84% right now. And I said today to my subscribers in my opening call, we should test the 9-period exponential moving average, and we've just done that. So do we get a rogue wave to the upside and then pull back? I'm not sure. There's still an outside fighting cup formation with trendline resistance and left side, right side price time action, a whole bunch of things going on. All I can say is that if there is a close, it doesn't have to be a close. If there is a push above the high of 21,070.90 made yesterday, that would say, for me, in the daily chart, would start a leg 5 up. And I might have to move the 120-minute chart 5 a little bit to the right. I don't know yet. Okay, so that's that. I could also show you this daily with, look, and yeah, the MACD is at 81%. It's good. And sorry, the MACD is good. The stochastics at 81%. On balance, volume is just fading miserably. It says that there really isn't all that much volume. Well, what's going on here? So volume is 335, 109, 104. Huh. Yeah, all I can say is that probably the down volume was much greater than what we've seen in up volume recently. All right, a couple of things I wanted to look at here. So the TLT, I just said trading band. XLV was a question. What about the XLV? Yeah, nice move to the upside. So I have, my contention is that you remember when President Obama came in, and basically he got the Nobel Prize for being the peace president before he was even president. A whole bunch of things went on. And then what happened? Raytheon, all the defense, not defensive, but the defense stocks rallied to all-time highs, 200%, 300%. Raytheon, GD, which is General Dynamics. Oh, in fact, it just made a new all-time high yesterday, screaming to the upside. So the irony is that the peace president allows, well, it doesn't allow, within the context of peace, the defense stocks scream to the upside. Was it Lockheed Martin, LMT? Same thing, made a new all-time high this week, pulling back a little bit. ABC, D, there's a peak D and a leg F in the weekly. And not only that, the president who never spoke about the stock market, President Obama, it was anathema to him. It was just like, stock, I'm not, these are the guys that I hate. Hate meaning love, you know, this is the way it always is with politicians. So you have the stock market rally 300%, from under 6,000 to Dow in the 20,000s. This is incredible, right? 19,000, something 20,000. So my thinking here is that, and we've kind of pinpointed it in a way, there is, with President Trump, there's an area that I think is going to do extremely well, even though you wouldn't think so. In fact, there's not one area, there's probably 2 areas that are going to do extremely well, and I would not be surprised to see a kind of a bear market form in these military type stocks. We'll see. Actually, I hope I'm right, because it would be nice to have peace, wouldn't it? So, all right, let's get back to our story. I wanted to look at a couple of things. I had a question about right there, Goldman Sachs. Yeah, I'm a little disappointed. It was on my list. We didn't do anything. Bank of America was on my list. We didn't do anything. I said, I'm going to hold off. I don't like what happened. I think that they're acting miserably. The XLF, I thought this would be the chance for them to really start to move higher. I think later on they are going to move higher. It's one of the things that I spoke about in my webinar that I did last week. But there are other aspects to this that are really important. So I wanted to show you FCAU, which is Fiat Chrysler, screams to the upside. We'll talk about the autos when we get back. Basil Chapman, Tiger Technicians out. Dow's only down 11. S&P's down 1. I'll be right back.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
1163, 1165. Yes, Fiat Chrysler. Look at this. An amazing thing. It just recently was down at 960, and now it's trading. It hit 1160s yesterday, trading 1123. This is one of the best of the autos, and one of the reasons is, for me at least, anecdotally, I drive by. Maybe a mile away. There's a Fiat Chrysler dealer. And I see the turnover. I see cars just turning over all the time, and mostly the Jeeps. People love the Jeeps. Wherever you go now, actually, I don't like the back of one of the Jeeps. It's got that soft back, and I'm not sure that I like it too much. I mean, soft meaning is all rounded. I happen to like round, but I don't think this one works, just for my taste. But some of the other Jeeps are nice. I've been in one. It's very quiet, very smooth. Nothing. Consumer Reports gives them lousy ratings for their repairs, etc. But people love them. That's good. And I'm looking at this and I'm saying, gee, this is a nice looking chart. So they're doing something right, obviously. They're up at the highs. The low that when it became an IPO back in July of 2016, 545 was the low. And now it's trading double, more than double. Good. Very nice action. Congratulations, Fiat Chrysler. If you look at Ford, tried to rally yesterday, giving back today. If you look at General Motors, and it's at the lower end of its entire, the monthly and yearly spectrum. If you look at General Motors, it's hanging in there, but it's really not doing very much. It's not looking that great. This is just going to be a really interesting. What's Toyota Motors? TM, I believe, right? Toyota Motors made a low at 104-ish, trading now at 109, trying to rally. Not a great looking chart either. This is going to be an interesting period. Question about Home Depot. I'm not sure how we got there. Home Depot breaks out and goes to a leg. This is going to be interesting. Is this a brand new leg A? Is this a brand new leg A in the in the weekly? Is this leg? Yep, it's leg D in the monthly. Home Depot's just done everything right. Building materials, appliances, home electric, whatever, you name it, they've got it. It's just a funny thing. The last pullback we saw, I said to myself, I'm looking at the home builders, and then all of a sudden the home builders came on a little bit stronger than I anticipated. HGX, remember I was talking about that the other day. So HGX, a leg D right, a peak D right now in the daily, leg E in the weekly, F/C in the monthly. And the monthly chart's really a fascinating, huge bowl formation from the July 2005 high of 293.66. So a massive decline to 54.31. I mean, whew, what a decline. And now it's back to 271. Hasn't made an all-time high yet. But this is the monthly chart and weekly chart are all looking quite good. The only thing I'm a little concerned about is if you were to buy it here, it would have to be with the contention in mind that this is a monthly leg C, and that eventually you're going to go to higher highs. You will have to put up with at least a 5 to an 8% pullback if there is going to be a decline with the general market. So at this point, there is nothing in the weekly chart that says it's negative. It's all very positive. There's nothing in the monthly. The daily chart is suggesting that some of the technicals are not confirming the rally. And that says to me, the pattern I would automatically do, and I'm going to do it right now, is that there's this arch formation forming. You go a little higher, but there's an arch formation forming with maybe 271, maybe 1.25% to 2.75% to the upside, but more likely a 4.5% to 6.5% decline if this low of the 25th of April, the low of 268.29, let's call it 268. If 268 goes as support, I think you've got yourself time and a little bit of price to the downside. Okay, so that was a question. Next one I had was, so Goldman Sachs, I've been saying, I'm not happy. I don't like those. Another question, the same questionnaire was, what about U.S. Steel? What about X? Well, X marks the spot, and it made a peak D in the monthly chart. I'm going to put in a down arrow. No, I'm not. I'm going to leave it like this. I have to wait for Friday, and then I have to assess. I can only put the down arrow when the MACD crosses negative, and by that time it might be ready to rally. So I'm just going to leave it as a plus sign, saying it has all the characteristics of a peak D, except that the MACD is a tad stronger than it should be. So U.S. Steel, I think, will be a buy at some point. Wouldn't be surprised. I said to someone who wanted to buy it recently, I said, let's wait until it tests the 20 to the 19-ish area. And that's all I'm going to say. The next question I had was CVX. Now, I'm so fascinated with this. I remember, I'm trying to think what the stock was. It'll come to me. It takes a little while sometimes when my mind is just not focused on it. It made a trough E CVX, which is Chevron, in the daily. It's gone to a leg D, almost certainly going to be making a test of the 104.40 200-period exponential moving average in the weekly chart, just straight down, lower lows, lower highs. Every rally is just not even, it's like a single leg A minus, just fails. Like the dreaded H, but within 2 bars, it takes out the left side low. I don't like it. I think there's a problem. And as a dividend stock, I don't want to take 105, 10 points. Well, I don't want to take a 7 or an 8% risk when I'm getting a 4.5 or whatever it is percent dividend. I really don't want that. It's just, I don't like it. Now, what I am looking at, and this is kind of important. So you've got CVX and you've got CVS. And I'm always fascinated. One change of the symbol, because some people mistake it. They say, did you say CVS or CVX? CVS, I liked it the other day, but it just got away from me, and I just said, you know what, I'm done. I'm not going to do anything with it. I don't know. For myself, I don't mind just grabbing something when it gaps up like this because I know what my risk factor is. I'm watching it. I can do all sorts of things. But for subscribers, here at D, it looks like it's going to try to tackle the high of the week of January the 20th at 84.72. So I'm prepared to take some risk, a bigger risk than I normally would. And the monthly chart seems to be improving somewhat. But I'm not, for subscribers, this is just too risky. So it means we've just lost it. And I'm going to show a bunch of stocks today to show the techniques that I've been using that have really been working very well. But at the same time, when the stocks gap up, it makes it so difficult in terms of risk reward. There are times, that I just dive in and I say, I don't care. We're buying this and we'll take the risk. And then I name the risk, and I usually name it with a little bit wider stop. And that wider stop allows you the flexibility to say, okay, give it room. I want it to breathe. It's gotten a little bit away, so we can't take a full position. We've got to take a smaller position because of the risk reward. And look at this. Look how many peak Ds. In the Chapman wave methodology, we're always looking for Ds. And look at that D right there. Back in December, January, bang, pulls back. Another D right there. January the 18th, boom, pulls back. Look at the D right here, peak, the fourth highest peak on the 27th of February. Bam. I got to say that, bam. And now we're in leg D. Is there going to be another one, or is this where the MACD still keeps climbing higher? And the stochastic, instead of fading like it did before, actually remains really good into Wednesday of next week. That'll be a difference. So I wanted to show you the difference between CVX and CVS. Here's my chart of the 10-minute. Look at that. I'll be right back.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
So, Al, thank you for your email from Namibia. When I flew from South Africa to London once, there was plane trouble, and we had to stop in Namibia for some minor repair. Thank goodness it was a minor repair. So, Ollie, this is O'Reilly Automotive. My nemesis. Why? Because we had once shorted and made money, and then I just kept waiting and waiting, because it pulled back when you least expect it, and then all of a sudden today it's down 15 at 249. I drawn in the patterns. I said everything about it was bearish. Spoke about it. I spoke about it in my webinar just the other day about the auto parts industry coming under tremendous pressure. And look at this. Head and shoulders, I did everything right, except we did not. I don't think I would have got the short, because yesterday I would have had to wait to see how it was handling the 120-minute chart and the 200-period moving average, which repelled it. So it must be some news or earnings. I don't think the earnings come out during the day for O'Reilly Automotive, but I've been talking about the whole sector as being highly vulnerable and in a bear market, a major bear market. All right, we're going to go. First caller, we've got John in Philly. John, how are you?
Hey, good morning, Basil. I just wanted to put a quick question to you, please, on the S&P futures, the ESM 7s.
Yes.
And ask you if you can, a very specific question, actually. If the high yesterday up at 23.95,
yes,
if that turns out to be a trading high or something more significant, how would that fit within the Chapman wave system, please?
It would be perfect, and I'll tell you why. Because if you look at I'm showing the continuous contract right now. In fact, I've got a leg D in the continuous contract at this particular point. Right there. But let me, if you don't mind, I'm going to go to the weekly chart because I want to explain something. And this is what I look at very closely, but you don't know it's happening until certain conditions are met. I'm expanding this. The chart that you're looking at, this very big chart here. In fact, let me make it bigger so I get rid of the monthly chart. So you only have this. If you look at the MACD, it is negative. If you look at the stochastic, it has crossed positive, but it's only at 67%. What I normally would do is I would show a vertical line, and that's the March 1st high, and I draw another line. If there is a turn down tomorrow, being Friday, and a weekly chart, that means no new high. This week says there's a potential. I have to say potential, and I'll explain why. For a double top, because if the MACD deflects lower from here and the stochastic goes to about 63 or 58% next week, and this is the weekly chart, this will be what I call a Chapman wave right shoulder failure pattern. It's like the cup formation. The only difference is that within the context of the cup formation, it's got a little H within it, so my eye sees it perfectly because I've done it so many times, and I can understand if someone's looking in and saying, hey, wait a minute, 2317.75 was the low of the week of March the 31st, and 2322.75 is the low last week. So it was a successful test. So there are two aspects that are absolutely critical right now. One is, if next week by about Wednesday, the E-mini is actually trading and is trading up very well and is trading in the 2394 to 2397 area, I have to say be careful, because I like to work a weekly chart on it. As you know, you cannot call the bar during the bar itself as completed until it finishes. If you're looking at an hourly chart, you better wait for that to complete, because anything can happen to the characteristic of the candle up until the very next bar. Then it closes that bar. So I need to see it close tomorrow, and we've got the earnings coming out. So let me answer your question really carefully. If there's going to be a pullback, all you need is to go to the low of this week, which is 2365.25, 15 points, 150 Dow points. Now what you've got is the pattern that I say is in a cup formation, a pullback from the left side lip to the bottom, the trough of the cup. On the right side, about 30% to 50% says be careful, because if you close below the 50% level, and my eye says 50% would be around about 23.58, there's just a really good chance you're going to touch the bottom of the cup. If you take that out, be careful, you could make a 1-to-1 to the downside. That's why I think it's such a critical point. And if I go through the reason why in my newsletter, I've got a whole list of, I don't know how many, maybe 20, maybe more, 20 stocks, because I'm following them closely. I don't want them to come off my list. I want every day to be able to look at them, and the majority of them are starting to roll over, or they've had this sudden expansion to the upside. Let me go back to the daily chart. You see the single leg A? It's actually two legs. There was a peak in the E-mini back on the 20th, April the 20th, the pullback for a day, and then it gapped up again. So I'm looking at this and I'm saying this was an emotional response. The stochastic is at 83%. My rule of thumb is if the stochastic goes over 80% with almost like a single leg to the upside, and then within 3 to 4 bars starts to trade at about 77% or lower, you've got to be careful. Consider it a failure pattern. If in fact we're at 85% by Wednesday and the stochastic and the E-mini is trading up, it's at 23.79 and has actually gone to a new high. It's in the 24.03s. The bull phase has to be considered as still in place. So I think I'm making it really clear.
Yes,
there's a chance. There's a chance for a failure.
I appreciate that, Basil. And if end of this week or next, if we come underneath that 65 mark, you mentioned 58 as a number.
Right.
If we happen to start coming back, looking at that weekly chart, can you just give your expectation as to how low a drop might go in the context of your monthly charts being only count C?
Yeah. So for me, it's becoming clearer and clearer. I used the monthly doji candle of last week. My rule of thumb is after a doji candle at a potential recovery high, in this case an all-time high or low, if you see a close in the E-mini in May above 23.98, that's the round number high. Of course, the continuous contracts are that, whatever the high is for you, because it'll change, it gets smoothed out. That would say, in other words, over the candle high of last month, that will say any pullback should test the candle open and close. That would be 23.6150. And then if it goes even higher after that, it means the whole bull phase is continuing. If, in fact, we can't take out the high, but we take out the low, and that would be 17 from last month, and we start to move lower, it means that the opening price of March becomes the resistance, and we should continue down. My eye says 22.62 will be major support if there is a major turnaround. Hope that helps you, Z.
Thank you very much.
Thank you, John. Always appreciate your call. We'll be back straight after this downtown.
Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Learn how to trade options with Swim Lessons. Brought to you by TD Ameritrade. Think or swim. Next on TFNN.
Hi, folks, we're back. The Dow's down 35. Let me just quickly show you this 10-minute chart. Remember, we're looking at that peak E at the top, and now it's gone right through the rectangle support level. I can actually now extend it back again right there. Let's go to our next caller. We've got, who we got? We've got Scott in Safety Harbor. Scott, how are you?
Basil, I dodged a bullet thanks to you. I got to congratulate you on your call on X. If you hadn't said what you had and sort of confirmed where I was at of waiting for a sign of strength, I'd be out about $20,000 right now. So,
oh, my. Oh, well, that's good.
Well,
that's very good.
We had that $7 drop at the time,
right.
So it was it came right out of the blue. So it was a great call that you made on that. Absolutely.
Thank you very much.
Would you say at this time you are the best? Would you say at this time there's an opportunity there with X?
There is going to be an opportunity. I would prefer that it is a twofold opportunity. One is it's a price support level that we have to we really have to find that the stochastic is attempting to create some kind of a base, and the MACD, which is still very negative, is turning around. That's number one. And number two is I'd like it, so that's part A. The part B is another esoteric kind of thing that you won't be able to find in textbooks, so I really can't even give you a backup for it. But I know from my historical perspective, what you need now are two pieces of news information. So that means I'm looking for some kind of basing between, maybe 21. It's at 22.30. It's down again today, 48 cents. It's had a tremendous smash from the 31 area down to the 22s. That a lot of people got hurt. So a lot of people weren't even able to get out. You saw how quick that is. It was both a news event and it was a earnings. Everything came apart. So this is what I want to see. I want to see some basing. I want you to be able to trade it a couple of times positively to make some money, but it keeps coming back and retesting. But then I want one news event that says, oh, wait a minute, there's going to be some help economically. I don't know what statement it'll be. And then I want it to rally into the gap to get to the 25.80 to the 26.60 area. And right at that moment, there must be another piece of good news. And that good news makes a gap to the upside. And now you've got yourself some support, but there's a lot of negativity. So only put it on your list as an intraday trade. That's number one. And number two is you could even leave it alone. Just put it on your list. Don't even touch it. Keep sticking with your CX, which is doing exactly what you wanted. It's your kind of stock. I think CX is the one that you can start looking at a small position as more a permanent position. But I would stay with
you on X. I think that what happened there was a perfect storm, which was the fact that none of the infrastructure plays were coming to fruition, combined with the bad earnings. I mean, they collided, and when they collided, it just fell off the table, and some other stuff about the instability of the company and all that. But it's another example for everybody out there that you've got to put tight stops in, and you really, if you're not going to watch these things, don't blame anybody but yourself. You have to watch it every minute. There's no way you can trade hands-free. People think they can. Very good points. You cannot.
Thank you so much for the call.
Thank you,
I appreciate
Basil.
it.
Thank you. You are the best.
Thank you so much, at least for this moment, right? Thank you, Scott. So,
hey,
folks,
better be king for today than never, right? So today you're king.
Thank you. You're only as good as your last performance, like in music.
Correct.
So, folks, let's just be real careful. I'll be back with Tom O'Brien later this afternoon, and have a great day. Otherwise, I'll see you tomorrow. Check out my opening call. I think you'll find it informative and hopefully very helpful. I'll be back later with Tom, otherwise tomorrow. Have a great, great day.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This is TFNN.